Friday, May 6, 2022, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at how fiat currencies lose value, how they get debased. Of course, we know the old saying that fiat currencies always revert to their intrinsic value, which is zero, or paper money, if you want to call it. And I'm going to focus on the UK because that's where I am, and our currency is rapidly melting down, which means it's losing more and more value, and the cost of living and inflation is not going to get better. Before I start, though, I like to say that, yes, gold and silver have been in a frustrating consolidation of late. Gold, of course, is still up on the year. Silver is probably pretty much unchanged. But many of you ask me where you can get physical gold and silver. The purpose of my channel is not to try to get people to buy gold or silver, but I believe in stacking. So I get people asking me, and yes, my first advice is shop around for the best deal, for the most reputable dealer. But I also have a promo code with Gold Investments, very reputable bullion dealer, family-run bullion dealer that's been around over 40 years, since 1981. And the promo code there is Monaco64. Oliver and Simon Temple will give you a very good service, personalized service, or you can just deal online. And if you quote my promo code, you get 0.5% off the offer price. So I think any time is a good time to exchange depreciating fiat currencies for real money. But especially now with the way the prices have been suppressed, I would say. So anyway, back to the topic of the video, and that is, why do fiat currencies lose value? It might seem obvious to me, but to those who are just learning about the nature of our fiat currency system, I think they deserve an explanation. And before I go into some of the reasons why I think they devalue, I want to reference this book here, The Triumph of Gold by Dr. Franz Pick. And in the introduction by Henry Jarecki, there's a part here where Henry Jarecki talks about what Franz Pick told him about currencies. So I'll quote here. It says, "He and I often argue about its randomness. I saying all of life was unpredictable. He saying it was obvious destiny. To defeat my skepticism, he repeatedly cited his two somewhat diverse educational inputs. His hometown rabbi, whose teaching proved for Pick that every currency was doomed to be unstable. And the second, the 19th century Prussian economist Georg Friedrich Knapp, who believed that money, or currency, I would say, was an instrument of state order, that its value reflected the public's attitude toward the state, and that given man's failings, and thus the state's, the only road a currency can go is down." So that's very interesting. I mean, I read this book years ago, and it's one of the reasons why I've known this, and I've been able to be ahead of the curve, and hopefully you've been able to do a bit of that over the last few years if you've been listening to my videos. So compared to a gold standard, a system of sound money where gold and silver are used as money, where the state doesn't give the central bank a monopoly and make their currency legal tender, where they don't strip the convertibility of the currency. When you have a gold standard, it's very hard for governments to spend. Yes, they can tax you, but there's a limit to how much they can tax you, or else they'll kill the economy, they'll start a revolution. So governments are always disciplined under a sound money system. So they have to make sure that they run a balanced budget, just like we do, right? Because if we're always running deficits, we're going to be in debt up to here eventually, and we're going to go bust. But what happens in a fiat currency system is that men's failings, right? It's always tempting, especially when government has control of the currency through legal tender laws. They only allow the central bank to issue currency. And why is that significant? Well, because if the central bank didn't have monopoly of the issuance of the currency, all other banks would be able to issue currency backed by something, backed by gold. And that creates competition. People would move away from the central bank government currency if they started issuing too many of these with no backing, which is basically inflation, which is fraud. But with no competition, government will issue as much as they want, and they will run deficits. And what does that do? It increases the supply of the currency relative to the private economy, to the real economy. And the more government spends, the more deficits they run, the bigger the government gets. And it crowds out the real wealth-producing economy. And you get less and less goods being produced and more currency being produced. And it's the simple law of supply and demand. You create something more relative to something else. That something becomes less valuable, of course. I'll give you an example. You go to a farmer's market, and one day they only have a dozen eggs for sale, and they've got thousands of people. That egg is going to be a lot more expensive than if you go the next day and they have 1,000 dozens of eggs, right? That's all it is. And that's why fiat currencies always lose value, because politicians can't help themselves. And why is that? Well, because a lot of people don't understand this mechanism, and politicians buy votes. They promise everything, not just to the general public, but also to big business. They start wars. Wars are great business for big corporations, great business for banks, because they lend the currency. And and that's where we are. And some people say, well, the gold standard has failed in the past twice. No, the gold standard didn't fail. It's politicians that failed. The only reason we went off the gold standard in 1914 is because they wanted to keep fighting a war that was basically a war that the only really result of it was a lot of death and misery, but a lot of profits, of course, for the big corporations. And if they hadn't gone off the gold standard, that war, the World War I, would have probably ended in 1915 because they couldn't have financed it. So now to the UK and why our currency is getting debased. And you just have to look at this chart here. And this is the United Kingdom government budget. And you can see that since the beginning of the century, we have not run a budget balance, let alone a surplus. The last time there was a surplus was around the turn of the century. And I remember very well in 2010 when the Conservatives came to power along with the Liberal Democrats. George Osborne, the Chancellor, came out and said, well, by 2015, we're going to be running a budget balance, and then we're going to go into surplus. It's nowhere to be seen, and you can see here that as well on this other shorter term chart how things have gone. So when the government keeps getting bigger, when the government keeps spending more and borrowing more, and by borrowing more, government creates more currency because it buys more things. It gives the commercial banks the credit induction to create currency, but it's all flowing into the unproductive sector. And the more you do that, of course, the bigger the supply of currency, and then the private sector gets smaller. And they still count this government spending as GDP. So it's a fallacy. We've been in a recession, I would say, at least since 2008. And the other thing as well, all this currency that was issued, extra currency in 2008 to bail out the banks. That's what it did. And the banks weren't really reformed. The people who created the problem through the derivatives in the City of London, all the risk taking, they got their bonuses, they've stayed in business, and we're paying for it. So, and it's always like that. Your wages or salary, they go up, but never as quickly as how quickly the currency debases. Yes, there are some lucky people who are able to fight that. But yes, just look here. In the last 10 years, the smallest budget deficit was 2% of GDP. And the other thing I say as well, UK GDP has been growing at the most by 3%. At the most in one of these years by 3%. Every other year, it's like either growing by 1 or 2. So if you deduct all those deficits, because they're percentage of GDP, and that's extra government spending, the economies have been shrinking, the private sector, as I said. And look at what happened in 2020. They borrowed 15% almost of the economy, and they did that by issuing more and more currency through the central bank, through the City of London, the banks there. And this was just out of thin air. While the economy was shut down for 240 days, yes, I counted how long both lockdowns lasted. And you can bet it's not going to stop, because this year, I think the deficit, 2021 to 2022, is going to be around 8 or 10%. And Bank of England said yesterday, when they raised rates by a puny 25 basis points. Why do I say puny? Well, because RPI, inflation, retail price index, is running at 9%, and we've got interest rates at 1%. So the deficit spending is going to continue. And yes, and the Bank of England, as I was saying, said we're going into a recession. So it's the worst of both worlds, so to speak. You've got a recession, you got inflation, you got growing government, and and they're going to keep issuing more currency, and it's going to become worth less and less. And you can put that to other countries as well in Western Europe, Australia, New Zealand. They're doing the same thing. Australia raised rates as well, but a tiny 25 as well. So this is going to happen everywhere. And basically it's the law of supply and demand. When you have no anchor and the government has control and monopoly with the commercial banks, because the commercial banks are involved in this. They issue the currency, really, most of it. When you have that, you can bet that it's going to balloon, and the currency is going to go eventually to zero. Some people say, well, the pound is one of the oldest currencies. Well, in terms of name, it is. But if you go back to 1914, this was a pound. And actually, legally, it's still a pound. One sovereign, which is just under a quarter of an ounce. But now, under a fiat currency system, this pound costs you almost 400 fiat pounds to purchase. So people will say, well, the pound is a currency that's lasted a long time. Maybe the name has, but it's got nothing to do with what it was originally. And that's why it's going to go even further down. You're going to be able to buy less and less of this. So 108 years ago, a pound was this. And now a pound is 1/400th of this. And it's going to go, it's going to shrink a lot more, the pound. And that's currency debasement. If you have any questions, ask them in the comment section. I'll try to answer all of them. But also, if you're new to this channel, I do a live stream every Sunday at 9 p.m. London where you can ask all the questions. So now let's quickly look at where the markets are. It's 8:15 a.m. London time. And we're going to look at the pound. I'll show you how it's been not just against gold, but I'll show you against the dollar, which is another fiat currency that's going to zero, how badly the pound has done for the last decade plus. But we'll start though with gold right now. We got spot gold basically down to about $1 at 1876. Range has been 1879 to 1866. Silver is trading at 22.35. Yeah, precious metals are doing well yesterday early on. Yes, the stock markets and everything imploded. And silver got sold along with that. But gold actually, even though it came off the highs above 1900, it actually finished pretty much unchanged on the day, while the NASDAQ lost 5%. The Dow future this morning is down 80. The NASDAQ is down 34, and the S&P is down 12 points. The FTSE is down 30. Eurostoxx 50 is down 17. So now to the British pound, and then we'll look at the other currencies as well. And I've been warning people since I started this channel, because I knew that after 08, nothing was done to fix our banking, financial, and monetary system. And I've known that governments are still deficit spending. They're not running budget balance or surplus. So I knew that this was going to happen. They, of course, use a lot of scapegoats to blame the inflation on. The first one that I told people not to believe in is the Brexit scapegoat. And now they're using, of course, the COVID and the Ukraine scapegoat. But you can see that the pound topped above 2 back in 07. And it's, yeah, we've had ups and downs, but the trend is lower, and we're almost at 120. And in March 2020, if it hadn't been for the Fed opening swap lines to the Bank of England, I think the pound would have gone 1-to-1 with the dollar. And I'm not saying here that you have to have dollars, because the dollar is also losing value. It's a fiat currency as well. And at the end of the day, the report card of all these fiat currencies will not be measured against the dollar, but against gold and silver. And that's another reason why I think one needs to have physical gold and silver to protect their savings. Of course, you can have other investments, but gold and silver are money, liquid. So as you can see here, it's been, a constant debasement of the currency. Yes, we've had ups and downs. And it looks like we're going to go to 120 very quickly, and eventually even test, I think the low was in the 80s at 105. I think that level will be tested. And why do I think the pound is going to be so much weaker than the dollar? Well, because we don't have a major reserve currency. The central bank is not really tightening policy. and the economy is going through a recession, and you can bet that politicians are not going to stop the spending, because unfortunately the general public thinks government can help, and they're going to clamor for more spending. We had a local election yesterday, and the conservatives, not that they're conservatives, because it's a problem on both sides of the aisle. They lost a lot to Labor, I guess, and other political parties, and you can bet that people are going to clamor for more government spending. So that's how it happens. So the pound this morning is down another 1/3% at 123.15. It's been as low as 122.75. The euro is down 1/3 as well at 105. The dollar is up slightly versus the yen at 130.43. The dollar is up 0.5% versus the yuan at 671.40. And the dollar is unchanged versus the Swiss franc at 9.46. Aussie dollar is down over 0.5% at 70.71. The dollar is up 0.2 versus the Canadian, 128.58. And the Kiwi dollar is down 0.5% at 64.00. So, yeah, the dollar seems very strong. But as I said, it's still not the place to be. Just remember that the dollar index was created in 1973, and it started at 100. Right now we're around 103. And at that time in 1973, gold was at $80. So which is the best money or currency, really? Is it the paper dollar or gold? To the general commodities, well, WTI crude approaching 110. Yeah, we're at 108.23, but it's only a matter of time. I think it's up 1%. Brent is trading 111.35. So that's a double whammy for us here in the UK in terms of petrol or gas prices, because our currency is going down while the oil price in dollars is going up. So it's a double whammy. Won't get better, unfortunately. High-grade copper is pretty much unchanged, 428. U.S. nat gas unchanged as well at 880. We'll finish off looking at the 10-year yield. That's down about 2 basis points at 305. Yesterday we got to 310. So it was the first major move above 3% since about 2018. And the high in 2018 closing basis was around 315. And after that, the Fed had to reverse policy because they couldn't handle a 10-year yield above that level. I'm not sure it's going to reverse this time. So things are not going to get better in terms of funding credit, because this is where funding for the whole economy, credit, is derived from, the 10-year yield. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.